Live. Welcome to the Fintech Nexus weekly news show. I'm your host today, Todd Anderson, Chief Content Officer at Fintech Nexus, filling in for my colleague Peter, who is currently traveling south of the border in Mexico City. Peter will be back next week in his usual role as host, alongside myself and a special guest. But joining us this week is first Kevin Travers of our editorial team, and Kim Gerhart. Kim, if you can give the audience a quick 30-second reminder. You've been on a few times, but
Yeah,
tell us a little bit about yourself.
thank you so much. I'm so thrilled to be here again with you guys. Thanks so much for having me.
Of course.
I've been working with, in the fintech space for 15 plus years and working with credit card issuers and fintech lenders, et cetera. I'm on my own now doing advisory work, still within financial services and fintech. I'm working on a lot of interesting things, both with growth strategy as well as operational effectiveness and like small business lending, fair lending, compliance, unattended payments, credit scoring. I'm keeping very busy. I feel so fortunate to be part of this industry. But thank you for having me again.
Of course. Thanks for coming back. So we're going to kick off with a story that's taken up probably 90%, it feels like, of the fintech news traffic today. And that is the merge with the Ethereum protocol, the Ethereum blockchain. And so what happened, I think it was overnight, though I anticipated it was supposed to happen this morning, but happened overnight. The blockchain has moved from a proof of work to a proof of stake. Did I get that right, Kevin, or did I get that opposite?
Yeah.
You're right.
And so this will save energy efficiency. I think it's 99.9%. It brings up a number of other issues related to mining and what miners go to do now, as well as energy efficiency and gas prices, which are typically very high on the Ethereum network. And so it looks to address all that. It has been talked about, I think, for a couple of years now. It's been pushed back a number of times. It has since now gone live. And so it is a big deal, especially in the crypto DeFi blockchain space. Kevin, I know that you've written on this a couple of times in the past and written on crypto and blockchain a few times in the past. Tell us your thoughts about what this might mean.
Well, I guess it's overall good, and it's cool to see one of the most used network up, sort of like rebuilding a ship that's sailing on the ocean as it's sailing. It's cool to see that happen seamlessly so far today. The price did drop, but sell the news, I guess. It's good for people I'm worried about energy use of mining. But if you ask people that are big crypto nerds or developers, they're sort of split on the issue because it's sort of, I don't know. For one, there's the multi-billion mining industry. I think the block.com found that mining for Ethereum specifically was like $1 billion a month in fees brought in. People all over the world with all different mindsets collecting CPU, GPU power, all towards one goal of validating and solving math problems to get these coins. And that was an insane thing that happened. It still happens on the Bitcoin network, and now they have nowhere to go. I guess they're all switching to old Ethereum or Ethereum Classic or something, but that's a huge industry and a remarkable sort of human thought that all these people working together on something like decentralized wise. And then otherwise, for proof of, so they're going to have to go somewhere. And for proof of stake, I don't know. It seems like it's still to be seen whether people trust it or not, whether it's as easy to manipulate or if it can be manipulated just because you have a ton of coins. I don't think Ethereum is like that right now, but who knows if it might be. And it's going to be interesting to see there's a lot to be seen, I guess.
Kim, any thoughts?
Yeah, I mean, one thing that I'll notice, you were talking about the misplaced miners. They're not going down without a fight. So they're off still trying to work in parallel and still trying to, keep all of their work and all of their, livelihood still going. And I don't know how that's going to go. And Kevin, you may have some ideas, but I've just been hearing about all the live streaming parties, and there's a sense of celebration in the air today within the industry.
Yeah, for sure. I mean, it's no innovation is done in a straight line, so I think there's a lot still to be seen. But many people think the overall sentiment right now is it's a net positive. And so
save the energy, because I don't
Yeah.
want any more rolling blackouts and energy blackouts here in California. I've had enough. So
that's
so
for
hopefully
sure.
this will fix all of that.
So I wanted to move to our next story from new innovation in the blockchain and crypto space to an old brand name, and that is Walmart. So Walmart has been rumored, and some secrets not kept that closely about this new fintech venture that they are launching. They've actually taken some of the key people that were at Goldman and that were working at on Marcus and Goldman. And so this week they've now launched checking accounts. I believe it's to employees and some consumers as part of their initial test. And so I think, like the Ethereum story, a lot still remains to be seen how much Walmart is getting into fintech and what some of their other offerings will be. I was a little surprised that checking accounts is their first foray. It seems a bit dull in some ways, but the one thing I think that Walmart can do, and they have a great network of, is to increase the financial inclusion aspect of financial services. I think prior to, I forget when it was, but they were the largest issuer of prepaid cards for a really long time. If not, they still are. And so many people across the country use Walmart as their core store. And now giving them an option to bank will hopefully bring more people into the system. But I think there's still a lot that is to be determined with what their full venture is going to be. Kim, what are your thoughts on the Walmart?
I mean, I've been
announcement?
following. I get so excited thinking about Walmart and just thinking about bringing, the potential to provide better services to underserved consumers. I've been watching this, and that this innovation in this space is not new to them. So they were working with American Express, with Bluebird. They were working with Green Dot, with their Go Bank and Bank in a Box for checking accounts back in like 2014. So the promise has always been there. Of course, they're very big with prepaid, and their money center has a lot of different products. But I think that this one now is sort of like the closest, sort of not within their full control, because one is still, an independent company. But I am completely jazzed by this, to be quite honest. One is 100%, it's digital. So it's a little bit unlike some of the other stuff they've been providing in their stores, but even their physical store footprint is so enormous. So they're talking about 5,300 stores nationwide, 150 million weekly customers walking through their stores. That's
essentially
enormous.
5,300 bank branches.
No, that's right. So then you get Walmart, who has this reach and that has this relationship with so many people within the nation. And then you combine that with a digital financial service offering. I think it's really big news within the market. I'm so pleased to see this happening.
And they have some other partnerships, like with a firm as well, and you can take a bunch of items and get a credit offering from a firm at the point of sale at Walmart. So this is just layered on top of that. It's a little bit different in terms of who's the operating company behind it, but they've been doing financial services and innovation, like you said, for quite some time.
Absolutely. And I think that, you were saying, the checking account is a bit of a starting point. I would not be surprised if one does branch into fuller suite credit offerings over time.
Yep.
Yeah, I was just going to say it's as close to public socialized banking as America might ever see, because it really is absolutely everywhere and touches more than half the country.
So I wanted to move to the next story, which is from Crowdfund Insider. Embedded finance transactions predicted to jump to 7 trillion by 2026. Consumer payments will be 60% of all embedded finance transactions. reach 3.5 trillion by 2026. Over 50 interviews with industry practitioners, market experts, and analysts for this report. Not that surprising considering the trend that embedded finance has kind of been a key trend in fintech for quite some time. And I guess the volumes can come from a variety of ways because there's a lot of typical non-financial brands using embedded products as well that are offering financial services. So it kind of cuts across beyond just typical finance or typical fintech and moves into retail and other things that typically wouldn't be thought of as a financial company, and allows them to provide financial offerings. Kevin, I'll go to you first on this one. What are your thoughts on the growth of embedded finance and where that area is going?
Well, I don't know. I think it makes sense. They surveyed, they said 50 industry mainstays and looked through research to try to come up with these numbers. I think it's on point. I can see, I know later on we're talking about JP Morgan, and I think they clear 9 trillion in like merchant transactions every day, just that. And this is more, embedded is more like a consumers facing thing. But I started writing and working in this space during the pandemic, and that's all I've seen is growth and people using more and more online. And to go from 5% of all financial transactions to like 10% in just 5 years, that doesn't seem that too big of a leap at all.
Kim, any thoughts?
Yeah, to me, I really like their report. I really like their thinking and the way they laid it out. I like the way that they kind of looked at the new value chain from, end user to platform to enabler to the license aspect and the regulatory aspect. I mean, I really like how they were thinking about that. I think that their market sizing makes sense. You think about, the use of technology, which has really just been put on hyperdrive from the pandemic, plus so many of the enablers and the people and the companies that are working behind the scenes, the payment facilitators, the folks like Square and Adyen and PayPal and all of that, all those building blocks are there. And then also just thinking about more of the banking of a service and modular, service offerings and all of that, the ability to plug and play, it just creates this ecosystem that is just super, super easy. And, the platforms, they want to share in the economics of payments. And there's a lot of value to be had there from both customer experience, merchant experience, all of the data to really look at, looking at underlying customers and potentially extension of credit. The value is just enormous. It's just enormous. And the fact of getting stickier customers over time. So I'm very excited to continue to look at the growth within this sector. I think there's going to be other growth like small business. I want to keep my eyes on, I think that that's an area of growth. And I also think, there within the enabler section, there's like a lot of other functions where players are going to come up and say, yeah, this sort of needs to take place, whether it's regulatory compliance or what have you. So I'm really excited about the growth.
This next story I find to be, one of the more fascinating of the past few weeks. It's from the Financial Brand, and it's about Varo and kind of their journey. And what the CEO Colin Walsh thinks about what they decided to do now after the fact in terms of attaining the charter, the cost of that charter, the shift that they're now making, some staff cuts as well. It's hard to obviously build a bank from scratch. Especially, I think one thing, and that could have potentially maybe changed the equation was, it didn't seem like Varo focused on one segment of the population. They call it a bank for everyone, and that might be their big misstep in all of this, in that it didn't go after a segment or an area of the population that might need it the most, and kind of really figure out how to make a profitable digital bank on that certain segment of the population. So there's a lot of good stuff in here. He still doesn't regret doing the charter, which cost them $100 million. They've shifted now from a bit more of the marketing activity. I saw lots of commercials with Russell Westbrook, which I'm sure cost a fortune, to more product development. He talks about the staff cuts and the rumors that they're for sale, and says that it's a viable business. So I thought it was probably one of the more interesting reads of the last few weeks. Kim, what are your thoughts on kind of the Varo journey to date?
Yeah, I'm really rooting for these guys. I really am. They did things a little bit differently from, let's say, SoFi and Lending Club, who just decided to go out and purchase, smaller banks, right, to kind of get to a similar spot. But having said that, you can't reverse time, right? You have to kind of look at where you are right now. And I think that he's being really humble and transparent. They also raised a lot of money not that long ago, really to kind of grow customer acquisition, where some of this marketing, maybe they were a little bit too aggressive with the marketing, but in parallel, they're also open and saying, look, they're also investing in product development. So, there could be some more things that are going to be coming to kind of help them along this journey, again, like credit products, and going into a rising interest rate environment could actually serve them quite well, to launch some products where they could, earn some good interest, income on that. I'm still rooting for them. You have to look about what's going forward. The charter was a very expensive undertaking. In addition to the legal and advisory, it's like bringing a lot of those functions in-house from, the other companies and banks that they were using beforehand. All of that takes time, resources, and money. So
going first through the door is, it's a tricky thing to do. And, unfortunately for them, it's easier for people to learn those lessons now, and maybe not go that path. But,
right.
It takes a lot of courage to do it too.
Yeah.
And they were always steadfast in that we need a charter, and they never wavered from that. And I give them credit for it, even if it's maybe caused them a little bit more harm than they thought.
Yeah, I think that they're masters of their own destiny. If they need to make certain changes or change levers, they are able to react much quickly than having to go through a lot of different sponsor banks. So I think all that's good. But one of the other things you mentioned, Todd, was kind of like being the mask to everybody. It's like a lot of the stuff that we're seeing now with a lot of these neobanks coming out extremely niche.
Yeah.
Like, Nerve for musicians and majority.
It's getting a little crazy on the other side.
For Nigeria. Like, there's so many niche. So, it's, again, just different ways of playing the game. But I'm really rooting for the Varo team.
Any thoughts, Kevin?
I guess I didn't realize that Varo being first was always dead set on that charter. But as Walsh sort of said, it's an excellent article. It's such a cool deep dive behind the brain, or one of the leadership of such a cool and big fintech brand. But he says how the OCC charter type thing, that the borrow a bank, dare I say, I guess, used to be popular, but he says it was never for them because it was never full service enough. And I guess that's interesting to hear from the top-down leadership to say, because I'm so used to like seeing it, writing about it, or supporting it. But I was also going to say how I didn't think of that before, Todd, how they're not very targeted. How you have Lending Club, and I wrote about Majority earlier this week. They raised around because they're focused only on immigrants, when Varo is supposed to be for everyone. I think that is a challenge.
Yep. Yeah, hard to go against the JP Morgans of the world at the same time.
Yeah.
Moving to the next story, amid a market of faltering crypto platforms, EDX Markets was born. I think this is Schwab. Let me get all the names here so I don't screw it up. But traditional players putting together, which I think is, I don't know if the actual platform will work out as intended. I do think one thing that it does say is that traditional financial services companies are buying into Web3 and crypto more and more. why would a consortium of traditional powers come together to launch if they didn't think that there was ample opportunity to grow and build a product in the space? So I think it says, for at least from my perspective, it says a lot more about what traditional finance and how they view crypto and DeFi and the emerging space that it is. Whether or not this succeeds, I don't know, but I think it's a good plant the flag moment for crypto that traditional powers are launching a product together in the space. Kevin, I know that you've written on similar stories. What are your thoughts?
It's definitely a cool plant the flag moment. It's an awesome story by our reporter, my colleague Isabel Castro, and it. I don't know. I've been doing a ton of homework about finance and finance reporting in general, and I've been reading Flash Boys, and a lot about payment for order flow and Bernie Madoff's invention of it, and sort of like the heydays of electronic trading. And now some of the best in the world at it are forming sort of this consortium to maybe lead the way or maybe take part in this new era of crypto. And I can't help but think, one, that's great for people that want to see more people buying crypto, but also it's the best people in the world at making money off of trading. So instead of a high schooler from Ukraine making money off of an amazing program they built to help you trade coins or new digital assets, it's some of the greatest traders learned in quant and working in New York City or wherever they're based, or I guess Mahwah, New Jersey. It's an interesting change, and it's a sign that even in like a crypto winter, it's still going someplace. And maybe that place one day is just another digital exchange, like anything else, like commodities or selling things like that. Maybe not as exciting as, I don't know, as the hopes were even back this year.
Yeah, I think some of the things that kind of stuck out with me when I was learning about this was really they're kind of sidestepping the securities battle, and they're kind of sticking with tokens that are going to be more, clear cut. Let me see. I think that they also want to bring, this is might just be more marketing and positioning than anything. I don't know, but they want to reduce the trading costs by really promoting competition against, among market makers, to get more of those market makers onto the exchange. And they want to bring safety and compliance and all that good stuff to asset trading. So again, that just might be positioning and marketing.
I also think this helps I think there is an eventuality to the Bitcoin and crypto spot ETFs. And if powers like this are beginning to move into the space in a big way, that's down the line as well, because then regulators are going to be more apt to approve a product if it's anticipated and expected by those that they regulate normally than all these new actors that are coming into the space. So while they've continuously denied all the applications for a spot ETF, there are futures ETF in the Bitcoin space. I think that is an eventuality, and this helps. This helped get there. Next up, we have. Let's go to JP Morgan. So JP Morgan acquired payments fintech Renovite to help it battle with Stripe and Block. I think it's less, about the name of Renovite. Clearly, JP Morgan is, I think it spends $14 billion a year in technology. Amazingly, 7 of that, or half of whatever they spend, is on upkeep of old technology, which still says something as to the way banks are built, especially traditional power banks. And so it's another move into innovation space. JP Morgan is one of the few out there that can probably continuously acquire, launch new products at a fairly rapid pace to compete with fintechs. A lot of other banks, especially as you scale down, can't get there in the same way. So to me, it's another move, by the powerhouse bank, and JP Morgan is not shying away from taking fintech head on. That's for sure. Kim?
Yeah, I mean, Jamie, he is aggressive. He's aggressive, right? He's definitely making so many investments to really compete against fintech. And I think that in the case of merchant acquiring, and it's interesting because they've been making investments in other part of their business, and They willingly said that their merchant acquiring platforms are a little bit slower with modernization. And JPMC, they need to protect that number one position in merchant acquiring. They are enormous. Yep. But again, you get the entree of the Stripe and the Square and the fintech, and they recognize that they have a gap in offering. And while their revenues are sort of flat, they need to protect that number one position because others are definitely gaining share. And I think this technology, they were using them as a vendor. This is the other thing that I thought was funny, is that they were using them for a vendor for a while, and they just thought the technology was so fantastic that they just were like, okay, we're taking this in, because the switch is going to give them a lot of opportunity with different payment options, buy now, pay later, country specific payments and geographic expansion. And they also recognize that fintech really has a leg up on a lot of the incumbents because of these different, payment acceptance options, the checkout experience, being able to provide financing to both buyers as well as merchants, and a lot of other services. They realize they're behind the 8 ball, and Jamie is, he's not going down. So, this again is going to be good to watch.
Any thoughts, Kevin?
Absolutely. Kim is completely correct. Jamie is a shark. And I guess they were just working with this one team. They got 125 engineers that work in the fintech payments space. And they just loved what they did. And they just brought them on because they felt that weakness in sort of e-commerce. And I think it is cool that they have a plug and play ability with this new company, or because a brand like JPM needs to, keep a mind out for in every different country they work in. They have different strange options that people want to pay with. And they have to sort of incorporate all of them into this like giant empire if they want to see number one.
Next up is a piece from our friend over at American Banker, Penny Crossman. And it talks about how Starling Bank, Upgrade, and Dave have cracked the profitability code. And I think if you're a fintech founder, if you're a fintech employee, if you're in fintech at all, most fintechs today do not make money and are not profitable. I think it would be a very smart thing to do is read this story because these are 3 companies that are profitable. 2 of them in particular, which is Starling and Upgrade, are profitable in mostly because of lending. And so it's funny that more things change in finance, the more they stay the same. Lending is a huge profit maker for banks. And so I would suggest fintech founders and others read how they became profitable, especially now when investors are keen to understand how you get to profitability and how you stay profitable.
And I would just add, lending is a piece of it, but I think another piece to that as well is just multiple revenue streams, even apart.
Yep.
Just thinking about the, all the different ways that you can be making money and earning revenue is, all of these guys are good case studies.
Absolutely.
Kevin?
And I can't believe that linked study that 5% of challenger banks haven't yet broken even. But I do think lending and underwriting is very difficult, and the ones that do it best are still surviving. And I think some of them offer slightly different products. I always love that Dave offers that no overdraft thing and sort of introduced it. That definitely helps too.
Yep. Well, it looks like we're coming up on our time here, so I want to thank Kim for coming back. I also want to thank Kevin for joining us. Peter, hopefully you're enjoying Mexico City, and we'll see you soon. Before we go, just want to remind the audience, coming up next month in London, we are hosting our Merge event. It has the same name as the Merge we were talking about earlier, and it's talking about merging fintech, banking, and Web3. I'm sure we'll be talking about the Merge a great deal at the event Merge, pun intended there. So join us in London, October 17th and 18th. There'll be all sorts of great companies There's big tech. We have Google speaking. Big banks. We have SocGen speaking. Big fintechs. We have Plaid speaking. So make sure you get your tickets today. Check out fintechnexus.com for more details. Kevin, Kim, thank you very much. We'll see you
Thank you
next
for
week.
having me.
Same
I
time.
always enjoy these. Thank you so much for having me. I appreciate
Of course.
it.
Thank you for coming back.
Mhm.
Enjoy the rest of your day, everyone.
See ya.